Hi, this is John McCallick, and this is a presentation on valuation for the UCD Student Investment Society in March 2017. I guess the first thing we need to think about when we think about valuation is what are we aiming for? And essentially, what this presentation is going to go through is aiming to derive a price from some kind of fundamental information that you can compare with the share price for a company. You can also do valuations for private companies. I won't cover this in this presentation, but the techniques that you would use to value a private company are exactly the same. So here we see Ryanair's share price, and Ryanair is the example I'm going to use throughout this presentation. Ryanair's share price from Bloomberg using the GP function, and you can see whatever day that I downloaded this, Ryanair share price was 14.24. So if we're going to value Ryanair, we're going to want to look at what we think the share price of Ryanair should be using some sort of fundamental information. Okay, well, let's look at Ryanair in a little bit more detail. This is from the DES description screen on Bloomberg, and you can see down here, this arrow is pointing down to the market cap. And the market cap of Ryanair is equal to the share price of Ryanair, which is 14.245, multiplied by the number of shares outstanding, which is given underneath here, 1219.5, and that works out as 17.3 billion. So that is what Ryanair is worth according to the stock exchange, and that is what we are trying to explain when we think about the value of a company. Lots of other people think about the valuation of a company, and the most obvious are analysts for stockbrokers, for investment banks, and for other people. People like fund management companies, people who pick stocks to buy and sell for various reasons. So this is one example of analyst valuations for Ryanair, and you can get these on Bloomberg using the BRC function in Bloomberg Research. You'll get a list of research on the company that you have selected, and you can download those research reports. This is just a small extract from a research report by JP Morgan on the 14th of February 2017, which is specifically about Ryanair. You can see here it says the price is 14.34, and the price target that they're giving for Ryanair is €17. And that is essentially their valuation of Ryanair. They believe Ryanair shares are worth €17, or at least, technically speaking, they're saying in 12 months' time, that's where they expect the price to be. Okay, so further on in the document, they give their investment thesis and their valuation of Ryanair. So their investment thesis is that Ryanair has low costs, superior growth prospects, and a strong balance sheet. And this is qualitative type of information. Down here they have their valuation section, and they say that our Ryanair March 2018 price target of €17 is based on a DCF model. So it's discounted cash flow model, assuming a WACC, a weighted average cost of capital of 9.1%, and a terminal growth rate of 2%. And we will see when I talk about valuation using discounted cash flow and dividends later on in part 3 of this presentation, I'll go through what all this means and how you actually can come up with your own models similar to what JP Morgan have done here. But for the moment, let's just keep in mind that this is valuation using a DCF model. So the next thing we want to look at is another analyst's valuation of Ryanair right now. And this is from Goodbody's on the 7th of February. And they give a share price valuation of 1975, so that's 275 more than JP Morgan. So analysts tend to vary quite a bit in their valuations for their securities. And Goodbody use a different approach to JP Morgan here. They value Ryanair on the basis of multiples, and they call it their adjusted price to common equity versus return on common equity approach, and on a PE, an adjusted enterprise value divided by EBITDA view. I'm not going to go into the details of how they do this. In fact, I'm not 100% sure how all this works, but the essence of it is that they are looking at multiples like the price earnings ratio and forecasting those multiples in the future, and then applying those multiples to earnings that they have forecasted in the future, and that's how they get their valuation. So for now, all we need to note here is that this is a fairly radically different approach from JP Morgan, in that Goodbody are using valuation using multiples to get their valuation. And in part 2 of this presentation, I will talk about how you do that, use valuation using multiples. Okay, so if you want to get a wide range of values from Ryanair from a number of different analysts, the place to go on Bloomberg is the Analyst Recommendation Screen, ANR. And you can see here this is for Ryanair, and the information up here is about whether each analyst has recommended to buy, hold or sell Ryanair, and the information we're interested in here is the 12-month price target. And you can see the average over all the analysts that have given a price target for Ryanair is €17. Obviously Goodbody are a bit higher than that at 19.75, and JP Morgan are right on the money at 17. And you can see down here there's a list of analysts. I've highlighted the 2 that we have looked at, and they have a variety of different prices. Also, make sure to keep an eye on the dates as well, so that you know some of the analysts don't update their valuations very often, so they might be a bit out of date. There's also over here information on how highly ranked those analysts are for the particular security that you're using, which means how accurate have they been in the past. Okay, so that's an introduction to valuations. I guess all we saw there was that analysts have 2 major ways of valuing companies. One is by multiples, which we look at in part 2 of this presentation, and one is by discounted cash flows, which we will look at in part 3 of this presentation. Thank you for listening.